In this video, we will go over the number one thing every crypto investor should do before investing into any cryptocurrency. Let's get into it. So let's get straight to the answer. The number one thing every intelligent investor should do before investing is creating an emergency fund. And I will explain why having an emergency fund can mean the difference between a successful investor and someone that loses money with crypto. But first of all, what exactly is an emergency fund? An emergency fund is a financial safety net for future unexpected expenses. In a nutshell, it is saving a specific amount of money, which is different for each person, so that if anything happens, such as losing a job, crypto investments going down in the short term, or any other unforeseen event, you will be able to afford those expenses without having to get into debt or without having to sell your investments during a bad moment like a bear market. The emergency fund should be in a different bank account that you only access during emergencies. It is a break only in case of emergency account, and traveling, leisure, and other non-vital expenses are not considered emergencies. Having an emergency fund will provide you with multiple benefits we will touch on later. But what amount of money should you have in your emergency fund? The amount is based on all of your monthly expenses. Once you know how much you spend each month, you have to multiply that amount by the number of months you want to have saved up. Experts differ in the amount of months that you should have saved up in your emergency fund. Some recommend a 3 months emergency fund, others a 6 months emergency fund, and others recommend having an emergency fund with up to 12 months of expenses. After all, it all depends on the stability of your income streams and how dependent you are on them. It is not the same having multiple income streams so that if one of them fell off, you will still be able to pay up all of your expenses than having just one job that if you lost it, it will be really hard for you to get a new job to replace that one. In that case, you will have a higher risk so that you may need to save up more in your emergency fund. However, all experts agree that all emergency funds should cover at least 3 months worth of expenses. I personally have 6 months worth of expenses saved up in my emergency fund because I like that peace of mind that gives me that if everything went wrong with my businesses and investments, I will still have 6 months worth of expenses to get back up on my feet. Now that we know what is an emergency fund, why it is so important to have an emergency fund before investing? That's because emergency funds have various advantages that make them really worth the effort. Let's see the most important benefits of having an emergency fund. First, they provide you with the peace of mind that if something bad happened, you have your financials covered for a few months and you can look for solutions without having the panic of not making ends meet or having to take on debt. Second, it makes you a less emotional investor. If you don't have an emergency fund and you are investing too much, you are essentially investing money you cannot afford to lose. What do you think it happens with most people in that situation once a bear market comes around? They have to sell their assets at a loss when they could have waited for the next bull market and potentially made a profit. And third, it opens your possibilities as an investor. If you don't have an emergency fund, you may want to invest in more liquid assets that you can liquidate in case you need the money. However, in most cases, these more liquid assets, like for example earning interest from stablecoins, give a lower return than other assets that require a long-term commitment, like for example investing in Bitcoin and holding for the long term. Having an emergency fund lets you take slightly more risks and focus more on the long term, because you know that your short term is covered with your emergency fund. Some of you may be thinking, well, I have stablecoins giving me a return. Isn't that enough for an emergency fund? Well, after seeing what happened with the stablecoin UST and the Terra collapsed, you may already know that in crypto nothing is guaranteed. Algorithmic stablecoins can lose their peg, and collateralized stablecoins are too centralized, which comes with other problems. A lot of people lost their life savings and emergency funds in what they thought it was a safe investment in the USD stablecoin. Sadly, this was really hard to predict. So you don't want to have your break-in case of emergency piggy bank in anything else than dollars or euros. Once you exceed your emergency fund target amount, then you can invest in other stablecoins or crypto-related assets as you wish. So in conclusion, an emergency fund should be a priority for someone looking to acquire wealth by investing. It is not only easy to do by sending money every month to a separate bank account, but also provides with a lot of benefits for the ones that build up this emergency fund, as we just explained. And as always, remember that this video is not intended to be financial advice. Let me know if you enjoyed this kind of video, not talking about any particular project, but talking about the strategies that apply to all crypto investors. If you enjoyed this video, leave a like and subscribe to see more to the point crypto and investing content. Thanks for watching and see you in the next one.